Morning everyone, welcome to Ainsley News. It's Tuesday, Crypto Tuesday. Today we're talking Bitcoin supply trends. Bitcoin accumulation trends have softened in the short term despite extremely constructive long-term demand trends. The potential energy for a capitulation event is in place, but is yet to manifest as it has in previous market cycles. Bitcoin prices continue to consolidate this week, compressing into an increasingly tight range between a low of $37,274 US dollars and a high of $42,450. This was covered in the previous edition of our crypto news. The market currently exists in a delicate balance amidst a backdrop of high macro and geopolitical uncertainty playing out on the global stage. We're now 2 years on from the major capitulation event in March 2020 that saw Bitcoin prices plummet over 52%, falling from $8,000 US dollars to $3.8 thousand dollars in 2 trading days, and marked the end of the 2019 to 20 bear cycle. Capitulation events like this often signify a complete and total flush out of all remaining sellers, turning the tides in favour of the bulls. We can see that in the period from October 2021 to Jan 2022 was one of the very strong accumulation sessions, likely by price-insensitive hodlers. However, for most of 2022, this metric has fluctuated between a value of 0.2 and 0.5. This highlights the impact of global macro uncertainty on investor sentiment, with weaker accumulation taking place as a result. This week, we've also seen a notable increase in older coins being spent. Older coins are held by investors who have more experience with the characteristic volatility of Bitcoin markets and are often considered synonymous with smarter money. As such, we see older coins being spent at higher levels. It can indicate a more bearish tilt in sentiment with the hodler class. Coins older than 6 months represent 5% of all spending volume this week, which is a notable uptick from recent months. This could also be an indication that longer-term holders are reaching peak frustration within the market, finally selling their hands potentially at the bottom. A few charts we're showing you today, so jump over to anzbullion.com.au, click on news, and you can check out all of these Glassnode charts here. Next chart here is showing you the relative proportion of the coin supply held by short-term holders who accumulated within the last 155 days. This cohort is statistically the most likely to sell their coins in the face of market volatility, especially during a final capitulation flush out. We have continued to see the amount of coin supply held by short-term holder cohort decline. This can only occur when large portions of the coin supply are dormant and crossing the 155-day average threshold, becoming long-term holders. Short-term holders' supply reaching low levels is historically associated with the later stages of bear markets, as patient buyers send coins to cold storage for the long hold. Short-term holder supply is currently near all-time lows, which is constructive for prices. The hodl waves are also showing that coins younger than 6 months old are at all-time lows. 24.53% of the circulating supply in this young age cohort, which means that 75.47% of the supply has remained dormant for more than 6 months. This is again a relatively constructive observation for prices and indicates that hodling is dominating the investor behaviour, even with the prevailing macro winds or risks as headwinds. If we look at the illiquid supply shock ratio, we've seen a significant uptick this week, suggesting that these withdrawn coins have been moved into wallets with little to no history of spending. This metric will trend higher as more coins move into such wallets, and we can see that it currently has a similar market structure to the 2018 to 20 bear market, albeit on a shorter time scale. The ISSR metric is currently at 3.2, which means the amount of supply held in illiquid wallets is 3.2 times larger than liquid and highly liquid supply combined. This metric does indicate that a persistent demand is present despite struggling prices. The uncertainty associated with many macro and geopolitical risks have weakened short-term on-chain accumulation trends since January this year. We can also see marginally elevated spending by older coins this week, although it's still not suggestive of any widespread loss of investor conviction on a macro scale. With over 2.51 million Bitcoin held by short-term holders at an unrealized loss, there remains a risk that sellers have not yet been fully exhausted. The potential energy for a capitulation event is there, and as such, an event would be consistent with all bear cycles that have happened before. However, hodling does continue to dominate investor behaviour, and the longer-term accumulation trends are still impressively constructive. So all looking good for long-term holders here in crypto world at the moment, especially for BTC. So jump over to ainsleywealth.com.au if you're looking to buy, sell or exchange any of our large cap crypto. ainsleyBullion.com.au for all things physical, gold, silver and platinum. And of course, goldsilverstandard.com if you're after a crypto that's fully backed by gold and silver. Great place to park profits in between trades, if you're thinking about it that way. Enjoy your Tuesday, everyone. We'll catch you tomorrow for more news.